Hey everyone, Mark here, Mark P Markets. Thanks for joining me for another Bitcoin video analysis stream. Today is a holiday in the markets, so it's a little quieter than usual. I'm not expecting a whole lot of people to join, but hey, if you're going to spend a little time with me here today, I would appreciate it. Also, it's good for you because you get a sense of what is on the horizon for this week. Okay, so if you're new to the stream, here's how it works. Hold on, let me adjust my microphone. Okay, so first I'm going to run through the economic calendar real quick. Then I'm going to get into my Bitcoin analysis, right? We're going to talk about the scenarios, potential support and resistance levels, and how to shape your expectations for the coming week. And then I'm going to get to your questions. Okay, so if you have a question about a stock or an altcoin, please share it in the channel now. And then I'll be able to get to it. Now, I'm going to try to keep this at an hour today. I always say that, and I always go over, but I'm really going to try to keep this to an hour. So if I missed your question, I apologize. But now would be a good time to put your questions in the channel. Also, if you'd like to share what country or what city you're located in, that's always a fun fact. Okay, so with all that, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. And let's get that slide off the screen. Hold on a second here, and we will get to my chart. Just give me a moment. All right, there we go. You should be able to see me. Hey, everyone. Okay, so again, it's good to see you all. Let's see. Let me just see who my regulars are. I always get the same people. Alex from Romania. Got my Romanians represented. Mr. Plow, good to see you. Kai, okay, cool. Peter, good to see you. Eligius, all right. Stian, all right. David, Miami. I love Miami. Winter. All right. Kai. Okay, cool. And over on TradingView, got Nader. All right. Barak. Hey, Barak. Good to see you. All right. Cool. Southern California. Nice. All right. Well, I'm streaming from the northern New Jersey area, also known as the greater New York City area. It explains why I talk funny sometimes. Anyway, okay, hold on. This microphone's bothering me. Let me put this over here. That's a little bit better. Okay. So first things first. Let me get into the economic calendar real quick. All right. It's not on my screen. I'm just going to tell you it's a quiet week. All right. You should look at the TradingView economic calendar. They have their own, but there are only 2 events worth mentioning this week. And if you looked at the calendar, you should know what they are. Okay. If you've been following me for some time, the first one is on the 23rd, which is Wednesday. And that is Chairman Powell testifying, okay, the head of the Federal Reserve. And he testifies on Wednesday. I don't know what time, so you want to check that on the calendar. And he also testifies again on Thursday. So that's the only, there are other events this week, but those are the only 2 that really matter, because here's why. Whatever he says, he may say something that's really not a surprise to the market, okay? He may say something that, okay, the market's priced it in, no big deal. But he also can surprise the market. That's what you have to watch out for. Now, you can't sit there and watch his testimony and try to trade on that. You have to let the market figure it out. Okay, now, here's why I mentioned that it's so important to be aware that this person is speaking. The market can get very erratic and very quiet going into his testimony because large players and market makers mitigate risk, and they know that a range expansion is very possible. So what do? They get smaller. That's how they control risk. So there's less activity, or their spreads get wide. You know, the market makers, their spreads get wider, okay, because they don't want to take the risk. So that's something to be aware of. Again, if Chairman Powell hints at any surprises, then you can see a range expansion out of nowhere. And a chart is not going to help you figure this out now. It can go either way. It's random, okay? You have to embrace that idea that markets are random. So now, that's the economic calendar. Before I get into the Bitcoin chart here, I just want to ask you all a question, okay? This is the interactive portion, and I'm going to check the answers right away on this. So I always talk about that the market is basically a game of chance versus a game of skill. You should know what both of those are. Now, of the skill, I mean, this is more of a game of chance. I've talked about that many times. You should know that. You should embrace that. That means markets are random. But there is some skill to this game, okay? There is a degree of skill. Can you tell me what you think that skill is? Where do you think the skill is in this game? Now, people that follow me closely, I've mentioned things like this before, but this is something I really want to bring up and bring to your attention. So put it in the channel. I'm not going to yell at you if you get the wrong answer. Just tell me, where do you think the skill in this game is? Okay. Do you think it's in chart analysis? Do you think it's in fundamental analysis? You tell me. Where do you think it is? Patience is a skill, Nader says. Okay, patience. So these guys are saying patience. Risk management. Burak, you're close. Burak, you're close. Risk management. Risk management, Alex says. I would say risk management, Steve. Steve says. Okay, well, you guys are definitely on the right track. Skill means wait for setup. Shayshank says. Okay, it's a pretty good answer. I mean, that has to do more with your rule following, which, I guess you can sort of group that into risk management. But here's the answer. This is the answer that I figured many of you wouldn't get. But the skill in this game is how you take a loss. I mean, I guess you can say risk management. You can include that in risk management. But really, the skill, the true skill, and this is even more particular on smaller time frame strategies, like if you're a day trader or a swing trader, it's how you take that loss. And what I'm talking about is how you recognize when you're wrong so that you can take a smaller loss earlier. That's a skill, okay? Because if you can do that, if you can take a loss good like that, a small loss, and you can do that the proper way, then you have a better chance of preserving your capital. And when you have a winner and you make some profit, you have a better chance of keeping that money in your account, right? That's the skill. So and the reason why I bring that up is because we have this situation in Bitcoin, and I want to talk about this here because this is a good example. This is a good technical example. Now, many people, again, they think that the skill in this game is in evaluating the charts. They think it's about knowing an oscillator and all that other stuff. That's what the industry feeds you, okay? Wherever you look. I've said that many, many times. You can Google whatever, and everything comes back and implies that there's some kind of skill. All you have to do is learn something and you can make money too. But that's the furthest thing from the truth. It's an illusion, okay? This is more of a game of chance. But they really don't want you to know that because it's not beneficial to them, okay? That's why a fake guru can come out of nowhere and look like he knows what he's doing because the market randomly rewards his irrelevant ideas. So people, wow, this guy must know something. I mean, look, his trades were pretty good there, right? Random. So this game is more of a game of chance. And that is why a newbie can come along and do something like that, as opposed to if this was a game of skill, a newbie wouldn't be able to do that, right? Just like in a poker game, I bring up poker a lot. A newbie can sit at the table and win a game against experienced poker players because there's a high element of there's a random nature to the game. The cards are random. The outcome of the cards. There are probabilities to them, but a beginner can come in and just throw it all in, go all in, and the cards happen to come out his way, right? Random. As opposed to chess, which is a game of skill. If you sit at a chess table and you're a newbie, you're a beginner, sit at a chess table, and you play against someone who's been playing chess for 10 years professionally, do you think you're going to be able to beat that person randomly? No, that person will be light years ahead of you. Every step, every piece you move, this person's going to know exactly where you're going next, right? So you can't beat someone in that type of situation, right? There's no way. So that's a game of skill. So the market is not like that. So the reason why I bring all that up, I know I'm talking a lot, but there's a reason why I want to bring this up, and that's because of this situation right here, okay, on Bitcoin. Let me make this a little bigger here so you guys can see. This is the educational portion. Before I get into the analysis, I just want to mention this because this is important. I just said that the skill in this game is recognizing when you're wrong, okay? So if you took a long setup as a swing trade, for example, I wouldn't have called this, by the way, but let's just say this green candle, let's say that was a pin bar, bullish pin bar, okay? The 20K area is a pretty significant support. So let's say you wanted to take an aggressive trade because you say, okay, you know what? There's a good chance that this thing can bounce, which is true. If you read my analysis yesterday that I wrote on TradingView, I talked about the 25K to 28K zone is a conservative level to look for short setups, which means the market would have to get itself in there somehow, right? So there's some decent swing trade potential in that range, right? from 20K to 28K. That is if it can get that far. It may not. But the point is, let's say you took that trade. And let's say it's okay, you know what? I'm going to look for that swing trade. I'm going to look for that reversal and see if I can get, the short-term bounce. It's aggressive because you're going against the structure. The chances of it following through are low. You should know that going into the trade. If you're highly optimistic, well, 20K, that's a major support. And, I'm usually right about these things. And it'll go to 28K. That's what I think. If you use that word think, you're going to have problems, right? Don't think. The market might get there. The market might not get there. It's random. The market may turn at 26.5 and you're sitting there expecting 28. Okay. Oh, but I thought it was going to go there. Who are you to tell the market what to do? Okay. The market is always right, not you. So stop thinking. Let the market tell you what it wants to do and then listen to it. So this, again, I'm getting to my point here, and here it is. This candle right here. So let's say you took that trade idea, okay? You went long, and this is the next candle you see. Is that a sign of bullish momentum? If you're in a swing trade long, especially a counter trend trade, this candle should be green. It should be nicely green. It should be doing something like this, like, oh yeah, okay, I got the squeeze, I got the bounce. Right? That is what you should be seeing, a green candle that moves relatively quickly. Now, today is a holiday, but even then, and this is a small candle, this red candle can change. But if you were in this trade, you should be preparing to get out because this is not what it should be doing, right? Bullish momentum doesn't look like this. Now, if the next candle takes out this low right here, that's a sign that calls for adjustment, meaning perhaps take the small loss. That is the skill, getting out early. And then if it happens to reverse bullish again, getting back in. That's the skill, okay? Just like up in here with this potential short area, I actually called this short, okay? Now, I called it short, for those of you that have been following me, I called it short back here at like 29.2, okay? And the market was hesitating. And you had about 5 days to make adjustments to that. I even wrote about it in our chat and stuff. And I put an update here on TradingView. You can read it. I said you have an opportunity to get out in this area. This is before it went to 32K for a small loss or a break even or a small profit, because there was a point where it was almost 1,000 points in the profit, right? But it wasn't working because this is not what you should see when you take a short. That's not what you should see. And I saw that, right? So this thing got stopped out because my stops are relatively tight. And the skill in this situation would have been to get back in during these other sell signals that eventually appeared. Now, again, how come I wasn't calling those? Because I don't have time to watch this stuff all day long, okay? I mean, people think like maybe I sit in front of a computer all day and trade, but no, I don't. I actually have other tasks that I have to do, and I can't babysit the market right now. So I'm not going to catch them all, but I certainly wouldn't have been looking for longs. That was clear, right? Anyway, so that's the educational portion. I just wanted to mention that real quick. The skill in this game is how you adjust, okay? And keeping your mind open at all times. Okay, so let's move along here, and let me get to the actual analysis. And I see great questions, so thanks for asking your questions. I will get to those. So let's move along. Now, as far as Bitcoin goes, and again, whatever I say about Bitcoin applies to your garbage altcoins. I'm sorry I call them garbage, but that's what they are. They're highly speculative assets that are not poised to do well in this economic environment that we're in. You must know your macro, okay? You can't exactly trade on your macro. And I mentioned that too, macro a lot. Macro was more important in this bearish type of situation. You know why it's not as important in the bullish situation? Because if the market's going your way and it pulls back, all you have to do is hope, right? And that works. But in this environment, hope doesn't work, as you all know. You can buy it and hold it, and it keeps going lower, and it keeps going lower. When's this thing going to turn? When's it going to turn? The environment needs to have something to do with that in order for it to turn and sustain that turn. The environment hasn't changed. So this Bitcoin, as far as having any type of optimistic potential, the 28K, that's optimistic. Like that's like, wow, it actually got there. That area, right? This old resistance, old support, new resistance area. That's it. If it can do that, that's like your magical rally. If it can do that. If it can't do that, I mean, even if it can do that, I'd be anticipating at least a test of bottom again or something like that, because that would still be a lower high, right? That would be, and a lot of people, of course, if we had a few bullish movements, right, working its way up through these resistance levels, you're going to see a lot of fake gurus coming out once again saying, Bitcoin going to 100K. Oh, Bitcoin's going to go to 40K. Blah, 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 blah. All this nonsense, irrelevant nonsense that they use to try to capture your attention. Okay. Keep that in mind. The environment doesn't support that type of rally. Now, do I believe Bitcoin is just going to go to zero? No. Over long term, I'm generally bullish on Bitcoin, but I can't ignore this bearish momentum and the fact that it keeps breaking levels. So right now, I mean, it's sitting at this 20K support. Okay, I'm very pessimistic about it, going very far if there is any type of long signal. I talked about in my TradingView analysis, if you're looking for shorts, look between 22 and 24K. Or that's the aggressive area if you get a setup there, or if it makes it to 25 into the 28, that's your more conservative area for short setups. Don't get sucked into that long thinking that, okay, the party is back, because again, the Federal Reserve has to be part of that party. If they're not, you can forget this game, okay? So that's my primary factor I'm looking at, is the Federal Reserve, because even though they say, well, what does it have to do with Bitcoin? Bitcoin is an inflationary. It was actually created like gold, store of value. Okay, so it's an instrument to help you fight inflation, and it performed exactly right when we had rampant inflation and Bitcoin went to 69K. Okay, great. We had a very inflationary environment. Stock market was also making new highs and all that other stuff. But now we are in an anti-inflationary environment, and people argue, but we have 20% inflation. We have this, we have that, blah blah blah. But the Fed is fighting it. The market prices ahead, not what's going on now. The Fed is taking major action against what's likely to happen in the future. So that means inflation is likely to be lower in the future. If that's the case, there's nothing behind Bitcoin. There's really, what other catalyst is there, right? Maybe another catalyst will come along. I'm open to that, but it's not there right now. Okay, so as long as that's the case, and the momentum looks like this, and the structure is still like this, and we keep making lower highs, I have no choice but to anticipate lower lows. Okay, that's what the market tells me to think. I don't have my own opinion. Okay, the market tells me what to think. So here we are at 20K. If this level is cleared, as you can see, where are we right now? We're at 20K exactly, right? This thing went to 17 something. Now, I talked about the Elliott wave count. I talked about this to a few people, and I wrote about this in my article. If we're overlapping, anything below 20K overlaps the wave one, right? I've showed you this, guys, the week before too. If you look at the wave one, the rally from 2017, let's go back, right? The rally to 20K originally, there it is right there. Okay, remember that? So this rally, dating all the way back to here, all right, that's the wave one high. So we should not be overlapping, in the price should not be revisiting that area if it's in a wave four, because wave four is not supposed to overlap wave one. Now, this is a large magnitude, so you have to give it room. You can't look at it as like in an exact way and say, oh, well, it went to 19.5, it overlapped, so no. So I'm giving it the whole week, okay? If this thing stays below 20K, and on Sunday this thing is closed below 20K, then I will consider that an overlap. So if I'm seeing 18s, 17s, 16s, if I'm seeing that and it's closing there, then it's overlapped, okay? If that overlap confirms, then we have to change our expectations a bit and account for the risk. Now, let me emphasize this. Account for the risk. People want like an exact, they want me to give them like an exact, where's Bitcoin going to go? Can you tell me? No, I can't tell you because I don't know, right? But we can account for the risk. I talked about that at 28K. When 28K broke, right? I was writing my article as it was breaking, and I said, we have to account for 20K. I don't know that we're going to 20K. We went straight there. I had no idea it was going to get there that fast, okay? But I was saying you must account for it. What that means is you must factor it into your investment ideas or strategy or whatever. You must keep it in the back of your mind. So as far as 20K being cleared, if that would confirm that we're not in a wave 4. If we are not in a wave 4, that means wave 5 is not next, okay? What that means is 69K was the wave 5 and it barely went anywhere. If that's the case, then we are likely in a wave 2, a very large magnitude wave 2. If that's true, Bitcoin, if you look at the Elliott wave rules, wave 2 can go as low as or retrace 100% of wave 1. Now, I'm not saying that it will do that, but the possibility becomes in existence, okay? So that's really, those would be very low prices. You know, you're talking sub 5,000, okay? Which is hard to believe. Now, again, I'm not saying that price will do that if we overlap, because wave 2 can also reverse at the 618. It can reverse at the 50% retracement as well. It's a wave 2 though, okay? And also at this magnitude, you're going to need something behind it to keep that sustainable. So let's say we pull back to the 618, right? And then we're at the 618 retracement, perfect place for a wave 2 to bottom. That may be true, but what's going to give this thing a sustainable rally? Right? Is the Fed going to start lowering rates or something? All right. What's gonna stimulate this thing? Where's that speculative money going to come from? You have to answer that question. All right. So you can't look at a chart in isolation, especially if you're thinking big picture investing, right? You have to consider macro variables on that time frame. Now, if you're a small time frame like a day trader, then a lot of this stuff it won't matter because you're only looking for short-term momentum anyway, so it doesn't matter. Long, short won't matter. But big picture matters, and you need to be prepared. So here's how I use that information. If I'm anticipating that we're in a wave 2, which is not confirmed yet, but if it confirms that way, and it's possible, the possibilities are we can go below 10K. If that possibility becomes a reality, then what that means for me is if I'm going to invest, it will be smaller. You know, if you go back a year ago or 6 months ago when I was saying, hey, if we get to low prices, you can skew larger. Yes, if the environment doesn't change, but we're not in that same environment. So I would not skew larger at low prices. I would stay small or even skew smaller because keep in mind, you can also continue to invest or build your inventory on the way up as the market environment improves. That's what I prefer to do in this situation because I want to see some improvements. All right. So does that make sense? Those are the main points I wanted to make as far as technicals go. Yes, we are still at a general 20K is still generally an important support level where Bitcoin is trying to hold it up. It's fighting. It's trying to hold up. It hasn't cleaned right through it, right? Because we have a green candle, but you know, this thing should not be producing red candles for the next few days if this thing is going to bounce. So if this thing takes out today's low and we take out yesterday's low, those are sell signals. And I would anticipate a test of the 17K again and possibly a move to 14K, which is the next support. Okay. It may happen quickly. I mean, just a week and a half ago, we were fooling around 35 or whatever, 30, and we quickly moved here. So don't have opinions in this game. Keep an open mind. Anyone that thought like 25K was the bottom and bought into that is now at the mercy of the market, especially if they bought into it big with leverage. All right, so that's Bitcoin. Now, let me just real quick, before I move on to your questions, let's just do this. I want to take a look at this real quick because, again, like I always point out, this is what you should always be looking at. This is your macro picture. That's the 10-year note futures. And, you know, this trend is not bullish at all. This is a potential lower high that's developed right now. You know, again, today was a holiday, so these movements like today don't count. But as the week unfolds, especially with Powell testifying this week, Chairman Powell, if the bonds start pushing lows, that means the bullish party has yet to begin, okay? Or any type of stability has yet to begin. Does that all make sense? Okay. So let me start answering your questions. Now, I see a lot of stuff people typed in the chat here. I'm probably upsetting a lot of people. let's go back to Bitcoin and let me start answering your questions. Okay. All right. Hold on. All right. Here we go. There's my levels. All right. So let's begin here with let me begin here with this one with YouTube. All right. So I said hello. I said hello. Can you take a look at Path? All right. Stock. The RSI said, I'm just joking. All right. RSI. You know, oscillators have their place. Okay. Just you have to know what their place is. You can't put a lot of weight in them, especially if you're trying to trade the bigger picture, because they don't account for a lot of things. That's the problem with them. They're only looking at some kind of technical moving average, basically, is what many of them are doing. Okay, so here's a stock, Path. All I see are lower highs, right? First of all, you're looking at a stock, right? Look at this, bearish. There's nothing bullish about the bigger picture. Also, again, keep in mind, whenever you look at a stock, this is what you should pull up first, S&P, all right? Because wherever this goes, chances are your stock is going to feel the pain or the pleasure if this thing reverses. Now, you mean, oh, S&P is up 33 points today. That's bullish, right? No. Look at this bigger picture, all right? The S&P has been nothing but bearish, breaking support levels, just like Bitcoin. What a coincidence. All right. So if that's the case, I don't care if the stock is trying to put a bottom in, maybe it's trying to act relatively strong, but it's very risky because you're fighting the bigger picture, right? You're fighting the macro variables. So I honestly wouldn't do anything with this at this level. I would not touch that as a swing trade. If I was going to do anything, first I would consider it aggressive, meaning the expectations for it should be low, and I would at least wait for a test of low, for a double bottom at 1368, because if the market's generally weak, which the S&P is, and the S&P tests the, lows again, which is very possible, where's this thing going to go? Okay, so keep that in mind. I would be looking for the reversal around there if I was going to play it as a swing trade. As far as investing goes, I wouldn't. Many of these stocks, while it's never a bad idea to buy into lows because you're not buying highs, you're buying lows, you're taking less risk. Still, you need that macro picture to start improving. Okay. And maybe the bonds are in that situation where they're going to start putting in a floor over the next couple of months. Okay. Well, then accumulating some now and accumulating some stock over the next few months won't be a bad idea, even if the stock market continues to push lows, because if the bonds stabilize first, which theoretically they should, then the stock market probably won't push lows much longer, even though it can still push lows. Understand that. Just like when the bond market turned bearish, the stock market was making high after high after high after high, and everyone thought the party was just going to keep going. The bond market gave 4 or 5 months of warning. Okay, so I anticipate the bottom will be similar, and it's going to have to start with interest rates. Okay, because that's really the main thing right now. All right, so I hope that answers your question about Path. Okay. Oh, okay, Kai, no problem. All right, let me just see what else we got here. Okay, said hello, hello, hello. All right, Kai, USD CLP. Oh, the Chilean peso. You guys with Bill and the Chilean peso. Look at this thing, right? This is the dollar against the peso. Obviously, the dollar is, the dollar, first of all, has been generally, this is the dollar, okay, against the basket of currencies. Generally, it's strong. So, but double top. Trend is bullish, right? Higher low, higher high is likely to follow in the US dollar, which of course is a reflection of the bond yields, right? Bond yields continue to rise, bond prices go lower. This should go higher, right? So USD CLP, I mean, this thing looks like an altcoin. This thing is still poised to go higher. Now, what do you do here? I mean, you broke out. So, I mean, you know how I feel about these, right? Buying these breakouts are extremely risky if you're not in it, because it may fail, even though the dollar is still poised to go higher. So you have to decide how you want to handle something like this. If you buy this now, you're anticipating that the dollar, will start pushing highs this week, and this thing should continue higher mindlessly, meaning, even though it's at a high, you get no pullback. That's a high risk momentum type of trade. You're going to have to babysit that. And it's probably, if you do something like that, it's probably a better idea to keep it as a day trade, right? Because this thing can turn. You're in a failed high area where, even though it hasn't failed yet, there's potential for this thing to fail and at least pull back. Doesn't mean it's going to go into a bear trend, but it can pull back. So you want to wait for either a retest of this old resistance for a more conservative play. What's that, 870? Is this in the pesos? Yeah, this is in pesos. Okay, 870, or perhaps a steeper pullback, which, I mean, it's not very likely in this environment, but hey, if it gets there, this could be an opportunity. 828, this area right here. All right, so those are your areas. You may even get one. Look at this little support right here. Maybe even if you get a test of something like that or in that zone, those would be the areas. What low is that over here? 852. So those would be the prices where you should be looking for conservative entries, right, with a bullish reversal. Otherwise, the aggressive, you just jump into this thing, which again, I don't suggest that, but it doesn't mean it won't work. Okay, when they're going vertical like this, and you have the dollar behind it, it takes a lot to turn the dollar around. Now, keep in mind, Powell is speaking this week. Okay, Chairman Powell is testifying 2 times, and he can turn the dollar around because he runs the dollar. All right. So let me jump over to the other chat here. Sorry, I've been ignoring you. Let me see what kind of questions we got here. All right, no problem. Can you please focus on Bitcoin? Ethereum may move on the bear market since they were in bull market all the way. Yeah. Okay. So Bitcoin and Ethereum, they're basically going to do the same thing. All right. They don't move out. They may have some variation, but typically everything follows Bitcoin, right? As far as the garbage altcoins. Now, Ethereum is not a garbage altcoin. Ethereum is number 2. Number 2. That's my Dr. Evil impression. So it's just going to do what Bitcoin's doing. All right. So it keeps breaking supports. I use Bitcoin as your gauge. That's what I would do in this situation. There's going to be a lot of hype and a lot of talk of, oh, Ethereum's at great prices. I mean, look at this thing. It's like pushing 1100 here. This thing was as low as what? What is that? 879. Man. So these are the best prices. Don't miss out. Don't pay attention, because if Bitcoin continues lower, this is going lower. I don't care how great they are. I don't care how many smart contract things they have. I don't care how many other ecosystems are built on top of it and all the other kind of technical nonsense. It doesn't matter. These are speculative assets. They're not real assets. They're gambling assets. Think of them that way. In order for Ethereum and all the altcoins to get going again, you need speculative money. You need easy money. I don't know how many times I have to say this. You need easy money. Where is the easy money going to come from? Where's it going to come from? The Federal Reserve is the one that makes money easy. They make it cheap to borrow. Unless, well, who's going to do it? The ECB? Who's going to do it? The Bank of Japan? They're going to come out, we're going to make our money so cheap that we're going to just create global inflation. Are they going to do that? All the banks have a tendency, there's a tendency to sort of follow each other, right? And anyway, those other banks are they don't run the reserve currency of the world. We do, right? The US is the world reserve. The US dollar is the world reserve currency. So it's going to have the heaviest effect. You understand that? So if there's no stimulus, these things, the party's over, all right? So keep that in mind. I don't care fundamentally how great they are. Doesn't matter. It's about the perception of the future. Look at the stocks like Apple. Is Apple a bad company? No. Is Amazon a bad company? No. Is Google a bad company? No. But they're all getting hammered in this situation. Why? Because the market is selling off, right? Because money is coming out of the system. Those are good companies. Intel's a good company. Walmart's a good company. ExxonMobil's a good company. Those are good companies. Ethereum is just a coin, okay? It's a speculative gambling coin. Just keep that in mind. It's like a penny stock. All right. So I hope that answers your question. Okay, let me just move along here. And I'll start getting me on that. I'll rant about it all day. Okay, so greetings from hey. Okay, Barack, good to see you. All right. EREGL, Barack wants to see. Barack. I don't know I hope I pronounced your name right. I have a hard time with your name. I'm sorry. Okay. EREGL. What is this? Is this a Turkish stock? Let's see. It might be. Yeah, Turkish stock. Okay. So is this in lira? Is this in Turkish lira? It probably is. Yeah, it is. Okay. So, I mean, the lira may have an effect on this thing, just like it had on the Turkish stock market. So you may want to keep an eye on that as well. But let's take a look. First thing I want to see is the weekly chart on something like this. All right, because I'm not familiar with the stock. I mean, nice looking stock in general. Obviously, this may have be part of the lira effect because the lira basically got hammered, right? So you're in this. This is a nice pullback. Now, you're coming off of this resistance area. Okay, so not buying to the resistance. You're looking into supports here, right? You're coming into one. And I would use the weekly on something like this because that's going to have a much heavier weight. Now, so you're in an area of interest, all right, an attractive area for potential long. So you have the location that's with you. Now, again, the lira this is obviously a function of the lira. So you're going to want to keep an eye on that thing. But what you're looking for as it pulls back, because you don't have anything there yet, as it pulls back into this zone, how much money is that? See, 27 low. So between 27 and 26 around there. This thing right now is at 27.92. So maybe another dollar if this thing pulls back. You're looking for reversal in that area. Okay, bullish reversal. Now keep in mind, the broader trend hasn't turned yet, right? We can argue that the broader trend, the bigger picture, the long term is bullish. The midterm is, we can argue, is range bound. And the short term, which is this most recent momentum, is bearish. Okay, so you're going into basically a midterm support. If you're looking for swing trades long, right, then I would not expect any dramatic potential. You can use this price right here, $30.60 as a target. You can also use this high over here, which is going to be less likely, 35.5. Those would be your profit measurements, okay? You can even use this zone right here because it can turn anywhere inside that zone if it's going to stay range bound, right? Which it might stay range bound. So if you're looking for the range low and you're looking for a swing trade, that makes sense. As far as this thing turning and then going to new highs, while that is a possibility, I would expect, since this move is generally not a result of being a good company, but instead a result of, I mean, the more recent movement is a result of a cheaper lira. Just something to keep in mind, because the dollar is basically going higher and higher, and that's likely to put pressure. If it puts pressure on other currencies like the lira, I mean, that, I guess that theoretically that would drive this thing higher. So you just have to keep those moving puzzle pieces in your mind, but don't lose sight of the support and resistance. So I would basically treat this as a range bound situation for a short-term swing trade. That makes sense. Okay. Again, I don't know if you're investing in this thing or if you're swing trade, if you're thinking of a swing trade, but that's how I would treat that. When I do this analysis, by the way, I'm mostly speaking from the swing trade strategy or the swing trade time frame. Okay. All right. So thanks for asking. All right. Hey, from Sarasota. Cool. Hey, good to see you. Byte Federal. Hi, how are you guys doing? All right. Leonard and all them. Those guys are smart guys. Good to see you guys. All right. Guten Tag. Leonard, he's German. He's really German. Okay, patience is okay. That was my question from earlier. Okay, you guys, let's see. Freeloader, how are you? You mentioned how Cardano should not have taken out the dollar level. What is the significance of holding the dollar level? I've been observing theta. Okay. Can you please explain the significance and evaluate theta? Okay, so let's take a look at theta. So first of all, something like the $1 level, that's a psychological number. Okay, any whole number like $1, $10, $20, those are psychological. So there's going to be a tendency to get some type of reaction there. And if it breaks, if the level breaks, then that level is likely it's going to become a heavier resistance again, because a lot of people get long there and they're going to want to get out for break even, right? That's the tendency. Now here's theta. How much is this thing right now? Okay, $1.24. Look at the consolidation here around that dollar level. What's the low? 102, $1.02, right? That's the range low. Now, here's the thing. So while everyone may be focusing on, oh, look, double bottom, blah, 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 your macro is against you. Okay, again, theta. I know what they do. I'm very familiar with theta, but we have to view this as a garbage coin. Okay, it's highly speculative. That's what I mean by garbage. And this range, this consolidation, is a lower high. So you have a resistance right here. Okay, that's an old support. And you have all of these lower highs to contend with. Look at that, lower high, lower high. All right, so this entire structure is a lower high. Lower highs often lead to lower lows, right, George? So if this thing right now theoretically is likely to break the support, okay, that we want to call that $1 the support. So you have hopeful people perhaps buying it. Maybe the theta people are pushing marketing, buy it at $1 because you're never going to see this great price again. Not in this environment. You're likely to see it again and break because the structure favors that and the environment favors that. Okay. Like I said, if Bitcoin can't get its act together, why is Theta going to get its act together when it's a follower? So I would not be bullish on these things. Now, like I said, if you want to invest in the long term, perhaps you like one of these coins and you want to accumulate inventory for the long term, I don't want to discourage that, but you have to just account for the risk. Okay. These are highly speculative, just like penny stocks, just like the Russell 2000. Those are not instruments you should be putting money in and expecting anything good anytime soon. So what does that mean? Skew smaller, right? Buy smaller amounts, have your money set aside. Let's say you want to invest a couple of $1,000 into this, $2,000, invest $50 a month, okay? Or something like that. I mean, that's barely any money compared to your $2,000, right? It may take you 10 months or longer to be fully invested, and this thing may be at much lower prices, okay? And you'll be happy that you're getting in with small bites and watching your money melt away slowly than buying all 2,000 and then watch it get cut in half in like a week, okay? That's the environment we're in. Now, if the environment changes, we have to keep an open mind. The environment may change at some point. Again, we have elections coming here, midterm elections coming here in what, 6 months or whatever. There can be a change in power. That can affect monetary policy. There could be changes. So if there's if for some reason an easier monetary policy is a result, then you will see these things start to change. In fact, the change may be priced in earlier, okay? Depends on how the market anticipates that information. There are much smarter people out there than us retail traders. Or are they, what I mean by smarter is it's not like they went to a better school. They have better information than we do. So if they know, if Chairman Powell told his friends, well, I'm probably going to, I'm going to cut rates probably in a few months. Just let you know, don't tell anyone. Don't tell anyone. Do you think they're not going to act on that information quietly, right? We're talking like fund managers and those type of people who can move a lot of money around. So just like how were the bonds able to price what they were pricing in 4 or 5 months before Powell comes out and says, yeah, I'm raising rates. I made a mistake about inflation. Raising rates. I should have said that earlier, but I was saying transitory back then. But the bonds knew. Okay, so the smart money knows, right? Bonds are smart money. So that's my point. We're not in that improving environment yet. So if you want to invest more aggressively, wait. Okay, wait until the environment improves. I hope that answers your question. But that's the significance of a whole number, like $1. Whether it's Cardano, whether it doesn't matter. It doesn't matter the coin whole number. It could be a stock at 100. It could be a stock at 10. It's the same idea. Okay, it's a psychological effect. All right, I hope that answers your question. All right, let me move along here. All right, Stian, what about Intel? Are you talking about the stock Intel, INTL? Is that the right? No, INTC, I'm sorry. Are you talking about that, or are you talking about, what is Intel? Is there a stock called Intel? Yes, let's see. Is this what you're talking about? Euronext. You're probably talking about this one. All right, so let's take a look here. Lixor Tel, all right? This is, I guess, some kind of European stock. Not familiar with it, but first thing is, let's take a look at the weekly chart. And I put a line right at that support level. First thing I noticed, okay? Now look, we can argue long-term trend, higher lows, generally higher highs, generally, right? Except for up here, okay? Short, midterm, we can say it's consolidating, okay? Short term, we can say that this is bullish. We can also, I'm sorry, bearish. We can also say that it's a consolidation on the short term because we haven't broken the lows, right? In fact, this is a higher low, right, relative to this low. So you have some strength in there, all right? And I don't know, how they are affected by the euro. But, obviously the euro has been getting hammered, right? The value of the euro is going lower. So euro stocks may get a bullish boost from that because that's basically like an inflationary pressure. So let's go back to your Intel. So now here's the thing, Stian. It came off. This is a nice range low defined, and it came off of that. So this is chasing this. Look where if you get involved now, you're sort of in the middle of the range there, right? This is going to be lower probability in this area right here. That's like 50-50 right there. You're like right in the random zone. So I wouldn't do anything with that if I saw that, if I was interested in getting involved in something like this. So here's what you do to prepare. I always talk about being objective, prepare, right? And risk first. So objectively, this is an area that's not that good, okay? Being objective, even though this candle looks nice, anything can happen in here, okay? And the higher it goes, the more of a chance it can turn on you. So no reason to be chasing it. Prepare for support. If it get a retest, which is possible, okay? 35.14 would be your area, somewhere around 35, maybe 35.5, somewhere around there, right? You get a reversal candle, pin bar, that could be a swing trade long opportunity, and you can target the middle area, right, like where it's going now, or possibly in the higher zones if you want to be more aggressive with it to see if it can reach that range high, especially if the euro is getting hammered, right? I would imagine that would be, again, like a bullish pressure for something like this. I could be wrong, but using the macro, I would at least help. That would shape my expectations somewhat. Okay, so it might be within reason to retest this zone. Okay, and you notice I'm not being most optimistic and saying, "Whoa, it's bullish, so it's going to go up here because I said so, because that's what I think." That's nonsense. All right, the higher you want it to go, the less of a probability. Also, another thing I have to say is the larger the time frame that you're looking to work on, the greater the risk, which means you should be adjusting your size smaller, right? So for an investment, your size should generally be smaller, and smaller compared to what? To your full account, what your full account is. You shouldn't be, if you have a $10,000 account, right? You want to look at everything from a percentage basis. You shouldn't be risking 50% of your account on an investment, right? That's too high. So you have to size smaller. Now, I know no one likes to size smaller because if it works, I could have made more money, but that's greed talking. And if you have an emotional problem, like you can't control those, then I can't help you with emotional. You need to see a therapist or something. I'm not a therapist, but emotional people are not aware that they have emotional problems. They can't control themselves emotionally, and they take trades out of hope, out of fear, out of this, out of that, for irrational reasons. You have to have control over that. If you don't, you might as well play a slot machine. Okay, so you understand that's what I'm talking about here with Intel. I would wait for a test if you can get a test, and that would be a potential long opportunity if you get that and it reverses again. Otherwise, you're taking a much higher risk as far as swing trades go. Does that make sense? All right, so I hope that answers your question there. Thank you for asking about Intel. Okay, Elijah asks, what are my views on the Chinese stocks? Let's see. Well, I haven't been really following too many Chinese stocks. Let's see. Baba is a Chinese stock, is it not? Let's see how these are doing. Baba is probably a good gauge. Now, look, Chinese stocks. I'm not sure how these will really fit in on the bigger picture, but all I have to do is look to a chart, and it can at least give me an idea. Clearly, this stock hasn't been performing well, right? Neither has the S&P. So I'd be anticipating that, if the S&P keeps going lower, this thing's probably not going to go very far. This thing's had a recent rally attempt into a resistance, right? It's got a possible double bottom in here. I would imagine many other Chinese stocks look similar to this. Now, I don't know. I'm using this as a gauge. I could be wrong, but if they look similar to this, I wouldn't expect much. I mean, you have a range developing here. If you're looking for longs, this is not the place, okay? If you're looking for longs, at least wait for another test of support. You're likely to see it because this structure has not changed. Lower highs, lower highs. This is still a lower high. Does that make sense? I mean, let me think of another Chinese stock. Let me think. Is Taiwan Semiconductor a stock, TSM? I mean, Taiwan's not exactly in China, right? I mean, it's Taiwan. But I mean, this is going to be a reflection of the stock market or the NASDAQ, right? Lower highs there. That's not looking so good. I mean, maybe you guys can give me a good example of a real Chinese stock, and we'll take a look at that. Or how about this? The Hang Seng Index, HSI. Okay, that's going to give you an example of the Chinese stocks in general. Does that not look similar to BABA? Okay, let's take a look at a weekly chart, right? Oh, this is a weekly chart. So the Hang Seng is the index, right, for Hong Kong or whatever. So I guess you can look at this as a reflection of Chinese stocks. I mean, look at this. Same situation. Lower highs, lower lows, potential double top, you're in a range. So that's what the technicals say. There's nothing really special going on there. There's nothing bullish really happening. Yeah, you can argue about the double bottom, but you still have lower highs. So as long as that's the case, the context is still bearish. Does that make sense? So I wouldn't really be very optimistic about these. Okay. I would give them a chance to test lows again and see if they can. If they don't test lows, then maybe something is changing. I would expect resistances to break across the board. I would also expect something positive out of the S&P. All right. So I hope that helps. Let me see. Okay. You have said many times you don't short Bitcoin. Have you changed your stance on that? Good question. No, I have not changed my stance. I don't short Bitcoin. I'll call shorts for other people if they want to short it, but I always clearly state that I will not short Bitcoin. I don't care if it's how bearish it looks. I don't care if it's going to zero. I'm not shorting it, okay? Because for one, it requires leverage, and I'm not playing with leverage in this game. I know better. So, you know, I've lost enough money to know I don't want to play with leverage in this game. If I want to short something, I have plenty of other markets to short, which Bitcoin's following anyway. I can short the S&P, all right, which is much more liquid, much more reasonable, and I don't have to open up a special account to do that. So yeah, there's plenty of ways to short the S&P too, and all that kind of stuff. So no, I'm still not shorting Bitcoin. All right. All right. Hey, Bergs from Canada, welcome. What's next support level on Bitcoin? Tony, next support level I'm looking at is 14K. All right. If 20K is completely cleared, I'm looking at the 14K area. Let me make that more specific. Area, meaning 14K, 15K, that zone right there. Okay. That was an important resistance zone going back a couple of years. So I would anticipate that buying activity is likely to step in there. Whether it holds or not is another story, but that's where I'm anticipating the next support. Okay. So good question. Oh, got a guy from New York. Is that right? Milad from NYC, working and listening to you. Oh, cool. Got a New Yorker. Nice to see you, fellow New Yorker. Cool. All right. Yeah, I don't get too many people from New York. They're too busy watching Jim Cramer. All right. Anyway, let me see what else I got over here. Good question. Hey, thanks for chiming in, New Yorker. Okay, if TradingView, I don't know if the screen gets funky over there, just refresh your browser. Okay, because I can't see if there are any errors over there. All right, how many people do I have watching me over there on TradingView? I better see. Oh, decent amount. All right. I was gonna say if I only see like 2 people, I'm gonna just turn that thing off. No, I'm joking. I'm joking. All right, let me just move along here. Yeah, Magic City, right? Vanessa's from Belgium. Cool. All right, I get some following developing in Belgium. I got my Belgium followers. I got Romania. I got Belgium. Where else? Okay, can you look at ADA? Sure. Hold. Okay, Peter wants to see Cardano. I'm not going to yell at you, Peter. Don't worry. All right, so Cardano. They're all doing this, right? Now, I have to say something. Here's the weekly chart on Cardano. Considering where Bitcoin is right now and how hammered it's gotten in the recent week, I would have expected these altcoins to be like much lower than they are, which is interesting. So, I mean, that tells me that there's some relative strength. Doesn't mean a whole lot, but there's something. How much is this thing right now? 48 cents. Okay, so it's trying to hold up in that 50-cent area, but you're still fighting a bearish environment. You have a lower high established right there, which is what? 68 cents. So if you can't get back above that, I mean, for one, I wouldn't mess with this. Look, there's a weekly pin bar, bullish pin bar off of that support level. What's that low right there? 42 cents. Okay. Those are aggressive short-term potential trade ideas if you're interested in that. But again, why bother? Okay. If you're going to take a short-term potential trade idea that's counter trend or, counter against the structure, look to Bitcoin, look to Ethereum. These altcoins, they're probably what's going to happen to a lot of them. Now, I'm surprised. Like I said, I would have expected this thing to be lower. But basically what's happening here is it looks to me that they're just being out of play, meaning all those retail longs that had no idea what they were doing, they're all out. Okay, so all that pressure is gone. Either they're margined out or they've banged out of it, they're out of it. And now you just have it out of play, right? I see a lot of coins doing a similar thing. It's like, shouldn't these things be lower? But if there's no one left to sell, then they're just doing nothing, right? But don't let that fool you. It doesn't mean that they're strong. It just may mean that they're out of play. Like if Bitcoin goes to 10K or something dramatic, these things are likely to break their supports. So I can't sit there and say with any degree of accuracy. All I can look at is the structure and gauge an expectation. I see a lower high, right? I pointed this out on the weekly chart. I see a lower high over here, right? I'm anticipating lower lows until it proves otherwise. This consolidation just means out of play for now. The general structure hasn't changed, and neither has the environment. Okay, so I hope that helps for Cardano. Again, people see these things at much lower prices. They're interesting. You're not buying highs, like I said, so it's not a bad place to build some inventory if you're into these things, but just realize the environment's not in your favor. And if you're buying this thing at 48 cents, it can go to 25 cents. Just, you have to account for that. So you say, well, if it can go to 25 cents, then instead of buying $1,000 worth right here, I'll only buy $200 worth. And if it goes to 30 cents, I'll buy another $200. And if it goes to 20 cents, I'll buy another $200. And at least now you're averaging in smaller and more carefully in case, what if this thing goes to 10 cents, right? There's no way to know. And a chart is not going to help us with that, even though there's some technical support here, okay? It doesn't mean that it's going to continue to hold in this environment. If we were in a more favorable environment, I would be much more optimistic about these things, okay? What you want to see, a real ideal buying environment is when you have these things pull back and the environment is still ripe for speculation. We don't have that right now, okay? All right, so that's Cardano. Hey, Mario, good to see you. All right, let me see what else we got here. Any good tips on using stop loss orders in this environment? From Miami CEO. I find myself being impatient. Miami. I want to go to I love Miami. I find myself being impatient and selling before the stop kicks in, or the stop order getting okay. So as far as stops go, right? Stops are obviously important, and I always talk about stops, but it depends on your strategy. For one, are you using, is it a day trade strategy? You must use stops. Is it a swing trade strategy? You should use stops. Is it is it an investment? That's another story. You don't have to use stops. You use size. Okay. So, but as far as answering your question about the stops, why do I keep? All right, hold on. As far as answering your question about the stops, you want to use price structure to determine your stop. And the thing is, I just talked about like emotional problems. Wherever you determine your stop, which again should be based on price structure, you have to let the market do all the work from there. Once you put your stop, like only move it in your favor. Like if the market starts going your way and you want to start tightening your stop, okay, you can justify that. But let me give you an example. Let me give you an example of a stop that Peter knows this one, Peter Gersey, because I remember it was a long that I called, right? It was back here. Let me see. It was around 38K on Bitcoin. I think it was this over here. It was right around here somewhere. Was it this one? May have been this one. What's the high over here? 39. I think it was this candle right here, right? Forget where it was exactly. I called a long swing trade, and the trade went into play, and then it turned around and it got stopped out. And then right after it, not too long after it got stopped out, because the stop was a little too tight, right? I believe the stop was I think the entry was 39.5 or something. I can't remember exactly. Anyway, the stop was around 38, right? And it got stopped out. But right after it got stopped out, the market reversed. See that big green candle? And everyone's like, ah, look, you got shaken out, blah, blah, blah. And I remember Peter said, well, I don't feel bad because I told people you have to respect the stop. And Peter said, I don't feel bad for getting knocked out, even though the market's reversed. Yeah, well, look what happened not too long after. I think that was the price area. I can't remember the exact price area, but respecting the stop saved a lot of money. Anyone else like, oh, see, you keep getting stopped out. I'm just going to buy and hold. 20K. Okay. We were stopped out at 38. So which looks better now? Right. So anyway, that's why you have to respect stops. So my advice to you is use price structure and define. You have to know what type of trade you're taking. So if there are swing trades, you're going to have to use larger time frames to define that. A very common problem is people use stops that are too tight. I even make that mistake still, right? I have stops that I put them a little too tight, but I don't want to take too much risk, right? With these, even some short trades that I called got stopped out because the stop was just a little too tight. It happens. So, I mean, that's what I'd say about that. I hope that answers your question about stops. If you find yourself impatient, and you get out before the stop kicks in, again, that's an emotional thing. But you also, like I said before with this Bitcoin example, if the market's giving you a solid reason, an objective reason, something it should not be doing, then it's okay to get out earlier. It's possible that you may get faked out. That's always a possibility. But you have to also be willing to get back in. Okay. Now, what I just described can turn into a mess if you're trying to day trade because you're in and out constantly. And those costs will add up and make it, make things, you're not going to make any money. But on a swing trade time frame, you have to be open to get back in. Like, for example, when I got stopped out here, well, my idea, because I wasn't short, but I mentioned a short, right? There was an opportunity, even looking back, this was a clear setup to get short again. Okay, after it took a few days, but that was another short setup that if I had been paying closer attention, I may have mentioned that, even though I don't take those setups myself. I'm not shorting Bitcoin. Does that make sense? So that's really the other part of it is you may get out early, but you have to be willing to get back in if the market faked you out. All right, hope that answers your question. Alex, PDD is a Chinese stock. Okay, so let's see if does that look like Hang Seng? Oh, that's interesting. Let's take a look. So that's an interesting reversal. That doesn't really, let's zoom out a bit here. Oh no, it's similar. It's similar. This is the weekly chart on PDD, right? A Chinese stock, he says, is trying to reverse. That's certainly an interesting situation. You have the higher low, okay, but you still have all this bearish structure. And look, it's a similar range like the Hang Seng, like BABA. So I certainly wouldn't be optimistic here, right? If this thing can pull back and test those lows again and not make the new low, and you see the Hang Seng doing something similar, then maybe there's a change taking place, okay? But I'd also, ask a few other questions, like, is the bond market turning? Is the bond market stable? Right? Because that can also help gauge expectations properly. Okay. Do you trade options or do you treat them same as leverage? No, I do trade options, actually. I don't talk about them much because most people can't understand them. I tried doing some trainings on options, but man, just basic calls and puts, people are like, I don't get it. Yes, but I do trade options. But I don't trade like straight calls and straight puts. No, I do option combinations, particularly vertical spreads, because you can control risk very well with options. I like options a lot, actually, because they really smooth things out in terms of margin of error. And you could be wrong, and it's like, it's okay. It's very hard to get shaken out of options positions, right? And you don't have to use a stop either. Okay, so good question. Hey, Scott, good to see you. All right, Shayshank. All right, David. Number 23 ID Thursday. Number 23 ID. I don't know what that means. Number 23 ID. Okay. Tom. Hey, Tom. Tom. I guess that's a funny name, Tom. Okay. I'm not going to say anything. But yeah, I'm sure you're not the quarterback. But anyway, okay. INTC. Let's see. So this is Intel, right? INTC. Understand Intel is a market stock. So it's going to follow the market, right? It's going to do what the market. It's a top tech stock. So whatever the Nasdaq does, I mean, look at this thing, hammered. Okay, these are not going to do well in a rising rate environment. Hammered, broke that, and so that was an important support level, broken. So what do you do with something like Intel? Is Intel a bad company? No, they're just look, they're weak right now. What do you do here? Well, if you're interested in accumulating some, hey, you're buying some really low prices. Now, this is pretty bearish momentum. Where's the next support on Intel? You're actually in the area right now. Look, this dates all the way back to 2017. Look where you are. So you're in an area of interest for sure on Intel. Does it reverse here is another story. The environment doesn't support that. So it may fluctuate a bit here, perhaps push a little lower. Treat this, look at the NASDAQ, look at the S&P, use them to gauge Intel. Intel, by the way, I would think of it more as an investment instrument, not really like a swing trade. Although there have been some decent moves in Intel, relatively speaking, but something like this, I would think for longer term type of stuff, since it's a semiconductor leader, industry leader. Does that make sense? I mean, I would imagine AMD is going to look something very similar to this. I mean, no, it's not as bad. Oh, it's an old trade there in AMD, back when AMD was bullish. Look at this, right? They're all getting hammered. Here, let's take a look at the daily chart, right? AMD is pushing those supports, right? After Intel broke, people probably going to buy this into AMD. It's a bad idea, right? As a day trade, that's one thing, but bigger picture, there's just no reason for these things to put a sustainable rally together. All right, does that make sense? So if you're into Intel, again, small bites, the market needs to stabilize. And the market is not likely to stabilize until the bonds stabilize first. All right. Hey, Will, good to see you. All right, Will from London. I got my Londoners here. All right. Skill is in psychology. So Alex, yeah, I mean, part of it's a very big psychological game. Okay. These are guys answering my questions that I asked earlier. That was like an hour ago. Okay. Risk management, right? You got it. Okay. I'm going to skip all those now. Thanks for answering this question. That question, by the way. All right, Nick. Dollar cost averaging. Wait years. Well, that's actually not a skill. Okay. Vanessa. Okay, Vanessa, that's true, right? You don't want to let greed control you. That's part of being objective. And rules can help you do that, right? When I talk about rules, specific rules, you trade the rules, right? You don't trade the market, you trade the rules. The market has to meet the rules. So it helps you be more objective because it doesn't matter what you think. Does the market meet the rules? Yes or no, right? That's how like a robot would think. And that's really one advantage to being an algo trader. I'm not an algo trader. But an algo trader doesn't have to deal with that emotional conflict because they just create a set of rules and then the robot just follows the rules, whether it makes money or not. The robot doesn't care, okay? Okay, stay with strategy first and risk management. Okay, all right. Okay, hey, Dan, good to see you. David, okay. Greetings from Spain. Spain, that's another nice place. Yeah, Spain. I'd like to visit Spain. I can speak some Spanish. All right, mucho gusto. Shashank, trade means dramatic move both sides as always. Okay, all right. Travel, hey, good to see you. I got Yevgen from the Ukraine. Hey, I hope everything's cool over there. All right, I know it's been in the news a lot. Okay, nice answer about skill. Okay, no problem. Next, could you clarify that wave count and adjustment correction? Right, so I mentioned that. I mentioned that earlier, right? So we could possibly be in a wave 2. But I want to see Bitcoin close out the week. I'm going to really evaluate that on its weekly performance, okay? So I'm going to give it some room. You have to. On such a large magnitude, you have to give it some room. So on the weekly, we'll see how this thing closes out. But if it closes below 20K, I'm going to count that as a break. All right. And then this structure, the bearish structure from the 69K high, this is likely a wave 2, not a wave 4, if that plays out that way. Okay. I was anticipating that this entire structure going all the way back to this high, 65K, which was the initial high, right? And then we had all this. I was anticipating, or I was suspecting, that all of this, okay, all of this from this low to this high and all of this was part of a giant wave 4, okay? And even though we made the higher high, I was calling this a wave 4 because sometimes wave 4s can do that, right? For the failed high, that's what I was thinking. But we should not be breaking, we should not be overlapping wave 1, which changes the labeling. So if we're in a wave 2, like I said, that opens up possibilities that are much lower than people probably would like to hear. But you have to account for it, okay? Just in case. It may get there, it may not. All right? It's not a matter of if. It's not a matter of like when it gets there. It's if and how you account and manage for that risk. Maybe we don't go below 10K. Maybe we do. But if you're in a position, how are you going to manage that? Okay? That's what you need. That's what I mean by being prepared. Okay. I answered that question. You just use classical technical analysis? Yes, pretty much. Well, I don't even know if you can call it classical. I mean, I'm looking at just some very simple factors. I'm looking at price structures, and I'm looking at some, if a pattern makes sense, I'm looking at the context. I do look at macro fundamentals, particularly in this environment that we're in, but I'm not actually placing trades on that alone. I'm open to taking counter trend trades, but the potential has to be there. The setup has to be pretty clear. I mean, it's very technical in that sense. I hope that makes sense. Oh, from Iran. Hey, welcome, Arkan. Good to see you. Thanks for stopping by. I'm in Nairobi, Kenya. Oh, wow. You got wow, Kenya. I never thought I'd have a following over there. Cool. All right. Welcome. I think you're the first guy from Kenya, Bill. All right. Your knowledge is gold. Okay, no problem. Mark, nice name. I like your name. All right. You're with a K. I'm with a C. All right. Bogdanov. I don't know where that is. Okay. But thanks for joining me, though. Okay, cool. Cool. Use the ATR. Okay. So average true range. Understand what the average true range is, just basically a measure of the average price range over some period of time, right? So it's sort of like, in a way, it's a moving average. You can use ATR. It's a commonly used number for gauging stop loss orders. And but usually you multiply it, right? It's like usually 2 times the ATR, but it depends. That's more common, I would say, on day trader strategies, because again, things change a lot on the small time frames. So it makes more sense there. I don't use the ATR for swing trades. Okay. Anyway, good question, or thanks for mentioning. Okay. Would you advise, Vanessa asks, would you advise go convert Bitcoin for ETH as a long-term strategy? I can't give that type of advice. I mean, I think both coins have their purpose. I prefer Bitcoin over Ethereum only because I think of Bitcoin as a store of value like gold, right? Where Ethereum has other purposes, sort of like, how silver has industrial purposes. So, I mean, you can look at them that way, but either way, wherever Bitcoin goes, Ethereum is going to go. But Ethereum is not the leader yet. All right. Maybe one day Bitcoin will be out of play and people will be done with Bitcoin, and maybe Ethereum will take over. But until that comes, Bitcoin is the leader. Okay. So I don't see any reason to convert Bitcoin to Ethereum unless, you just believe in Ethereum and you like Ethereum better. But that's a personal choice. Technically, they move together. So it's really the same thing. Some people may think, well, Ethereum has more potential. Ethereum can run to 50K, right? Like Bitcoin. Maybe, right? It's a highly speculative instrument. I don't care how great it is. Like I said before, it's highly speculative. Keep something in mind. And I said this before. I'm going to wrap this up here in a few minutes. Man, it goes so quick. The next run, right? When we get stability back and speculative money gets invited back to the market, which again, that process has not begun. But when we get that, okay, and these things are at bottom, and you're going to see like the next leg, the next rally in the altcoin space, you're not likely to see the same coins run the third time. This would be the third time, right? Because we've seen two waves, two particular periods where there was a run, where money was just pouring into these things, okay? And if you compare the coins from the first to the second, yeah, Ethereum was in both, right? Ethereum was a big name in both, but there's no guarantee that it will be a big runner in the next one. I mean, it should be, because it's number 2, right? It's up there. It's definitely one of the more recognizable coins, but just keep that in mind, all right? Some new coin that doesn't exist yet may come out and get everyone's attention. You know, the Ethereum 2.0, blah, blah, blah. Oh, they have those. Oh, it's Neo. Ethereum 3.0, and it does smart contracts better, and everyone piles into that one, right? Because their marketing is better. So just keep that in mind when you're playing these things. Don't think of these as, I got the Google of the future, because you don't. They're speculative. They will do better when speculative money comes back, right? Just like the stock market will do better. Everything will do better. The question is, which ones are going to go the furthest, the fastest? That's another story, right? Which ones have the greatest growth potential? Well, I guess Ethereum has some, but like I'm pointing out, there will be probably a group of coins, maybe a new sector, right? The privacy ones or the banking ones or blah, 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 right? Some sector, and for some reason they're popular. And you're going to see them go from like 0 to 100, right? While Ethereum only goes from, 1,000 to 500. You understand? So getting in on those coins is a gamble. Unless you're an insider, maybe you invented the coin, maybe you're part of a community that's pushing the coin on everyone early, right? That's the only way you're going to get on one of those, because there's so many of those new garbage coins. They had all this amazing potential and none of them went anywhere. So keep that in mind. On the next round, it's going to be, you're not going to know which ones are going to go, but when they start to go, hopefully you have one. I don't know what to tell you on there. Just don't think just because Ethereum is whatever that it's going to be the next one. That's all I'm trying to say. All right. I keep saying the same thing over and over. What else we got here? Okay. Thanks, Mark. Yeah. People don't like me too much. I'm not very well liked because I'm too honest and I don't feed hope. I don't tell people what they want to hear. Especially on like these public forums. I'm contrarian. I'm anti. So whatever the crowd is doing, especially what all the fake gurus doing, I'm usually on the opposite side, or I'm thinking the opposite, or I'm always telling people to stay away from. So I'm not really part of the party. So I'm not in the inner circle. I'm not even in the inner square. All right, I'm just bad jokes. Okay, next. Let me see what we have here. But thank you though. You could press the like button. That might help. So we're going to bounce or not? Bounce on Bitcoin? I don't know. I mean, it's in an area where it might bounce. That's all I can say, right? I wouldn't short 20K. I certainly would, even though I don't short Bitcoin. If the S&P looked like that, I wouldn't short it. This is not a location to short. Momentum is still bearish though. So if you short it on something like this, you're taking a very aggressive type of trade. It may work, but the risk is high because this thing can bounce to 22K, 23K, 25K. Markets are random. All right. So it's the probability, something you cannot see here, right? The probability of a bounce is high, but does it bounce? That's up to Bitcoin. Right now, if it takes out these lows, then it's not bouncing, right? And that's when you have to figure, okay, bearish momentum is likely to continue in that situation. It's always about adjusting, not thinking you know where it's going, right? That's why when you ask me a question like that, I don't know. I don't pretend to know, right? Go ask a fake guru. I'm sure they know. All right. Ghana. Hey, all right. We had some people from all parts of the world here. That's nice to hear. Overall trend is lower. What is the potential short-term bounce to the upside? All right. So I answered that question, Miami. All right. So again, I mean, like I said, most optimistic view, 28K is most optimistic. I would anticipate somewhere between 22 and 25 is more, I think, within reason, somewhere around this area here. Why? Because that's an old support, right? It goes back to that pin bar right there. That's a likely area. If you can get in there, if price could work its way back into there, that's where I would look for shorts if I was going to short this thing, which I'm not, but that's where I would look. Okay, not now. And if you're looking for a bounce, that's where you really should measure your potential from. But like I said, whether the market bounces or not is there's no way to know. It's if it starts to go and it starts to bounce, you want to give it a try. If it turns the wrong way, you have to be prepared. You have to know your risk. Keep in mind, this thing follows the S&P. All right, people know it doesn't. It doesn't follow the S&P. The S&P went from like 4,400 to like, what is it, low of 36 something or whatever, and Bitcoin got hammered as well. There's a correlation there. It's been there for a while. All right, so S&P and NASDAQ are not, they're poised to bounce, but their structures are still bearish. So, you know, maybe Chairman Powell says something this week that sparks some sort of short-term bounce. Don't get all opinionated if you see the bounce. Watch the resistance levels. Be objective. Okay. All right. Let me see here. You're cool, man. But could we look at Bitcoin 2018 pattern? I think no. All right, Bill. Don't think that. Okay. History repeats itself in markets, but not like you think. It's not obvious. Like just because we may see like a head and shoulders in 2018 or some kind of bear, it's irrelevant. It's random. Okay. There were different factors driving the market in 2018 than there are today. The interest rate situation in 2018 was not the same as today. Players back then are not the same as today. So you can't compare that like that. I see people making that mistake all the time. I remember there was one clown back in December, okay? And he was trying to make this argument about seasonality. And based on his same rationale that you're just describing there, so, well, based on this, there's a 70% chance that Bitcoin's going to be at 100K by February. Maybe he meant next February. We're not at 100K yet, okay? But how many people got sucked in to that because they watch this fool because they think, he's an authority. He's this, he's that. He gave them this nonsense analysis. And I watched it. Where does he come up with this? The argument was completely, there was no foundation to that argument. It was like he was making it up. And he was comparing apples to oranges. You can't do that. And he was completely wrong, okay? But the point is, how many people got in because Bitcoin at the time was, I think, fooling around in the 50s or 60Ks. How many people invested because of what he said? And look where we are now. Okay, that's what I mean. So you can't look at history repeats itself that way. It doesn't repeat itself that way. Okay, it repeats itself more in like short-term patterns, like, you know, a double bottom is history repeating itself. A resistance or support level reacting a particular way is history repeating itself. Right? Like that support level may be from 5 years ago, and price tests it again, and buyers step in. That's history repeating itself. Okay, for the same psychological reasons. Okay. Do you look at tokenomics? BNB has all the coins put, and I just default to the okay. Tokenomics. If you're talking about things like the supply of the supply of coins, the circulation of coins, and all that other stuff, I don't look at that because I'm basically looking at Bitcoin as the gauge for everything. Now, there is something to be said about certain things, like, is a coin inflationary, meaning are they producing more coins all over the place, or coins, you know, is it a coin with a very small supply? That's important. Because if you're going to invest in a coin that has a lot of potential, it better not have a lot of coins available. That's what you want, right? If the coin has 10 trillion tokens available and they're going to only print 10 trillion more over the next 3 years, you're buying garbage, right? Why would something like that go, but it's going to go to $10 and it's going to be an $8 trillion market cap, blah, blah, blah. Nonsense. So I'm only interested in that sense, but I don't sit there and go look those things up. If I was going to invest in an altcoin, I would want to be aware of the coin supply situation and how it's being managed. Like, are they planning to print more coins, or can they print more coin? I say print. Can they make more coins and that kind of stuff? Because that will ruin potential. Does that make sense? Okay. Charts are patterns, and patterns repeat. Right, charts are patterns, but it's a short-term thing. You have to look at the environment. You can't just look at a pattern blindly. It's the context of the pattern, right? If interest rates are not the same as they were back then, it's not the same. Okay, because there are other factors that are driving it. So that's why you can't look at it that way. You can't say, well, in 2018, this is what occurred, so it's going to occur here. There's no rhyme or reason to it. There's no foundation in that. It's random. Okay. I've seen, like I said, I've seen a lot of people make that mistake. You jumped over comments. Okay. Let me go back. Let me see. I got that one. I got that one. No, I didn't jump over comments. Okay. Let me go. There are coins with trillion supply. Okay. You jumped over comments. Can we just look at it before we judge? I don't know what you talk. Well, I'm telling you, I don't know how much experience you have. I mean, I've been doing this for a long time. We can take a look, but I'm telling you, it's random. Okay, you don't want to believe me? It's all right. You know, it takes two sides of an opinion to make a market. 2018 pattern. All right, so let's go back to the weekly. All right, I have a few more minutes. We'll take a look. What pattern on? Let's see, 2018. I mean, again, you're talking about a time that's not even relevant. 2018, right? Yeah, so 2018, you're looking at this, the ABC thing here. Random. There was a different factors that were driving that, by the way. Okay, that was a pullback in an environment. Let's take a look at something more important than that. All right, let's take a look at the bond market, ZN1, because that is what is relevant from that time, not what Bitcoin is doing. So the bond market at 2018. Let's see here, 2018. Now look at this. So the bond market at that time, rates were rising, sort of. Okay, you had this little consolidation here, right? So rates were actually they were rising, which puts pressure on Bitcoin. No surprise. And Bitcoin had that erratic situation there, right? It was pulling back, right? And then what's this? Bonds rallying, rates going lower. What a coincidence, right? And Bitcoin started going higher. That is what you should be looking at, not some random Bitcoin pattern. All right. So I hope that answers your question. Again, markets are random, and you have to understand how patterns fit in, and you have to look at the context. Don't look at a pattern by itself. It doesn't mean a lot. They can appear randomly. You need to embrace that. You need to understand that. Okay. Otherwise, you just, you might as well be playing a giant slot machine, which is what most people do. All right. There's my levels. Okay. What is your, okay, so hold on. What is your advice to beginner guy who wants to jump into this market? And okay, Solana. All right. So yeah, I skipped these comments over here. Let me just go back over here, and then I'm going to wrap this up. I always say I'm going to cut this at an hour, and then I just start talking too much. All right, let me see here. A lot of people are talking about recession. That would be a great opportunity to buy some great stocks. Okay, hold on. Let me just go back here quick. All right, so Kai, my understanding is that bringing requires basically a recession, right? That's true. Significant unemployment, right. Well, that's higher interest. It's all an effect of higher interest rates. This usually takes years. Correct, Kai, years of ride. The Fed just doesn't flip it like a switch and be like, all right, we raised enough. We're going to turn it the other way now because, too many people are losing money. It's a process. It's called the business cycle. That's actually what this is. And the Fed is doing what they're supposed to be doing, managing or facilitating the business cycle. And yes, they have to do this. Otherwise, here in the US, we will be wheelbarrowing our dollars around, right? Because our dollar will be so worthless that, to buy a bread, we're going to have to go with a wheelbarrow. The Fed is taking the appropriate steps so we don't have to do that, right? They're doing the right thing, even though it's not going to sit well with a lot of people. But that's their job is not to make money for people. Their job is to protect against inflation. That's one of their primary objectives, is to manage inflation, because inflation ruins countries. All right, okay. A lot of people are talking about recession, right? So a great opportunity to buy some great stocks. Yes. Well, one way to confirm a recession is when you look at the bond yields when they invert, right? They call it the inverted yield curve. It sounds really complicated, but I think it's the 2-year and the 10, or the 10 and the 30. I think it's a 2 and the 10. When they go to the same level, or the 2-year yield actually becomes higher than the 10. I forget exactly how it is. I think it's the 10-year yield should be higher than the 2-year. When they're flat, that means they're at the same rate. And then when the 2-year rises above the 10, that means you get more interest for 2 years than for 10 years. That's a sign of a recession. Usually that confirms a recession, right? And the yields are doing that. So yeah, now as far as being a great opportunity to buy some great stocks, yes, stocks are going to be cheap. Thank you to interest rates rising and rising and rising, right? That's what's going to make everything cheap. And there will come a point where the Fed is going to have to stop raising them. Historically, the Fed has a tendency to overdo things. They were too loose, right? They were too easy money with that stuff in 2020. They were too easy, right? And that's why we have this situation we have. Now they're going to tighten, and they may tighten too much. Okay, that's what will create the opportunity. Right, but stocks are really going to get hammered if they do that. And at some point they realize, oh, okay, we tightened too much, so we're going to stop. When they start signaling that kind of stuff, most likely the bottom of the bonds will be in, and the stock market may be pushing lows at that time, but it will begin to stabilize in the months following, the Fed changing their tune. Okay, but like Kai mentioned, it can take years. So you have to keep that in mind. People don't understand bear markets. Okay. Okay. All right. Hey, Braskia, bro. All right, cool. Good to see you. What percent of portfolio, if any, to put Bitcoin in long term? Look, Bitcoin's a speculative asset. So speculative assets have to be a smaller percentage. I would say, if you're conservative, a smaller percentage of your portfolio, maybe 5%. I mean, that's probably a little aggressive, right? It depends on how conservative you are. You want to be a little more aggressive, perhaps 10% of your portfolio, assuming you have a $100,000 portfolio, $10,000, right? 10% maximum. Because if Bitcoin has some serious problems, which it can have, you're not exposed. Some people are clueless and they go 100% in. They're nuts. But they think, oh, but my friend made $1 million, or all these people got rich and it's a new opportunity. This is not a stock. Okay. So just something to keep in mind. I hope that answers your question. I listen to you every week. Okay, no problem, Vanessa. Good, cool. I'm glad you could stop by. Wedge, hey, Wedge, you too busy on the beach, Wedge. I don't know what to tell you, Bill. Too busy on the beach. That's okay. It's the same story here. I'm always just yelling at people. I'm ranting on things, talking too much. You know how it is. How do you know the S&P isn't following the BTC? It's joking. I've recently read that the canned food and gas are the best investment. Look, anything you read, understand something. Anything that's fed to the retail investor or retail trader, 99% of it is garbage. I have to say that. It doesn't matter. They feed you opinions. They feed you this. They feed you that. Don't have an opinion, okay? You have to look at markets. You have to look at the business cycle, and you have to look at potential engage risk, right? That's the way I look at it. It doesn't matter. All these experts come out. Now it's time to buy solar panels. And remember the whole solar panel thing? What about cannabis stocks? Remember that? So don't listen to that. Don't read. Okay. I mean, you want to read, just read for entertainment. Read like it's a romance novel, right? Read that kind of stuff like it's a romance novel. Let me ask you this. When you celebrate something, okay, let's talk about rational behavior for a moment, because you need to be objective and rational, not opinionated. When you have a party, right, or like a kid's party or something, maybe your soccer team. I don't know how things are in Europe if they have soccer moms over there, but there's a thing over here called soccer moms. And when they have the kid wins a soccer game or whatever, they have a party. They celebrate that party with pizza, right? Usually pizza is like a celebratory type of food, right? It's a comfort food. People have birthday party, whatever. Pizza. Is pizza good for you? Objectively, rationally, it's not good for you. It's salt, it's carbs, all kinds of, it's bad for you, right? It's garbage. It's not nutritional food. Don't you think a good reward should be something healthier, like fish oil? Who eats fish oil? Who consumes fish oil for a soccer mom party or someone's birthday party? Hey, let's all have fish oil. It's healthier, rationally speaking, right? Omega-3s, they're good for you, but no one consumes fish oil for like a happy occasion, right? It's something you have to take. Fish oil, it's nasty, okay? But rationally speaking, it's better for you. So by reading garbage opinions, you're consuming financial pizza. Stop eating the pizza. Consume fish oil. It sucks, but it's better for you. Okay? All right. That's my fish oil analogy. Like that? I had to think about that. Okay. I got to wrap this up. Note that the Fed does not front run inflation. They react to it, and it will take years. Right. The Fed reacts. Right. They don't anticipate. They do react. They react to like data that they see, and they are slow. That's maybe why they have a tendency to overdo things. You would think they'd be more sophisticated than that, running the most powerful bank in the world, but that is what they do. However the process works for what they do, I don't understand how they make their decisions. I'm not going to pretend to. I'm not in the Fed. I'm not a banker, but yes, that is true. No wonder why people don't understand bar markets. Right. And whenever the Fed inflates, and we've seen numerous occasions with quantitative easing, they stimulate these bullish things, and people think, "Oh, I know what I'm doing." Right. It's just the effect of stimulus, and then it reinforces lots of bad habits. I'm old enough to have, okay. Yeah, Wedge, me too. All right. Zelta, hey, good to see you. No beach today. Cost netting in, okay, cool. You're fishing. Nice. All right. That was a joke about gas. Oh, okay. See, you got me started. You got me started on the rant. Yeah, you like that pizza? I thought about that. I had to actually think about that. Okay. Yeah, but it's true. It's true. Stop consuming financial pizza. It's everywhere. And it's comfort food. Pizza is the problem with this country. Pizza. Too much of it. Okay. Fish oil. Fish oil is like watching a stock run away without you in it or having to take a small loss. That's fish oil. It's better for you, but it doesn't taste good. All right. Let me move on here. I got to wrap this up. Let me just see what else. Can we just look? Okay, I looked at it. What is your advice? Okay, so I'm going to answer that beginner question. Any recession starts from housing market. That's not necessarily true. Not necessarily. It doesn't have to start from the housing market. I mean, it can. All right. Pizza can actually be very healthy, at least in Europe. Okay. You're rationalizing pizza. It's still carbs, right? Unless that dough is made out of peanut butter or something, right? Something protein based or maybe plant based. Maybe you're eating a spinach, like a spinach dough thing, whatever. It's still carbs. You could put as much broccoli as you want on it. It's still bad for you. Okay, it's still bad. It's not a nutritious food, but it is better than the American version of pizza. I will tell you that. Right? It's not, the European pizza is not the same as the American pizza. I know that. Okay, but still, it's still not like a nutritious. Fish oil is still better than the European pizza. It's more nutritious for you if we're going to be objective and rational, okay, and not be emotional. So, all right. Let me just answer this beginner question. You want to look at the dollar yen? No, I got to wrap this up. I don't want to spend time. I'm sorry. Just come back. I do this every Monday. Try eating this healthy pizza for 30 days straight. Yeah, right. It's carbs, man. Carbs are bad for you. Anything in moderation, but still, we're talking about nutritional value. Fish oil has more nutritional value. That is a fact. Okay. Now, so let me answer this question. Beginner guy wants to jump into this market. And what do you think? So I'm not going to look at Solana right now, But just I want to answer your question about the beginner into this market. Well, for one, this is a great time to learn. Okay. This is a good time to educate yourself. So take it slow. There's no hurry. You want to jump in? Don't jump in. Take baby steps because there's no hurry here. There's no rush. The market's not turning around anytime soon. There's a lot of problems that have to be resolved, and the market needs to factor all these things in and show some signs of stability. So use this time to educate yourself, but educate yourself properly. Okay. Start with like basic stuff. You should learn your basic technical analysis. Understand basic charting things, but understand that these basic things are not going to help you make money. Understand that. But the goal is to eventually get to an objective point of view. Okay. And technical analysis can help you get there, but you need to have at least some, you have to understand what you're looking at. So understand what makes up a trend. Understand, learn things like Elliott wave, at least the basics. Learn support and resistance. Learn about how candlesticks work. Take some time. Now, again, you're going to come across lots of stuff. It's going to be confusing and this and that, but it's okay. Don't throw money in this market like thinking, I'm buying the bottom. If you want to take small bites or whatever, think in terms of investing. Don't think in terms of short term. As a beginner, I would recommend think more like an investor. Think bigger picture and allocate some amount of money that you want to invest. All right, let's just say, for argument's sake, $1,000. Let's just say $1,000, okay? And you're going to take that $1,000 and you're going to slowly put it into something, Bitcoin, if that's what you're interested in. But whatever you pick something of long-term value, okay? Like an index ETF, the Qs. The Qs aren't going out of business anytime soon. It's 100 of the best tech companies in the US, right? Something like that. And you can dollar cost average small, because this market it's not like it's going to bottom tomorrow and you're going to miss the bottom, right? It's going to take some time. So take your time to learn, take small bites and make a schedule for yourself. Spread that $1,000 into 10 increments, right? And each increment is going to be $100. And each month, once a month, you're going to go out and buy $100 worth of your one thing, right? And that's why I say something like an index, like the S&P or the Qs, because that you're buying a group of stocks at least, okay? Or if you just want to do Bitcoin, okay, or whatever. And now you're gonna average in that $100 once a month. It's gonna take you 10 months to invest your $1,000, and you're gonna have an average price. You're much better off doing that, because what if Bitcoin goes from 20K to 10K over the next 3 months? What if it goes that way? If you've invested your full $1,000, you're going to watch it get cut in half. Okay, at least while you're learning the market, you're in the market somewhat and your money's working for you. Don't let greed step in and say, well, but if you do that and Bitcoin runs up back to 30K, you could have doubled your money almost. Or if Bitcoin runs to 40K, you could have doubled your money in just 2 months. That's greed. Okay, and what you don't realize is that may be true, but there's a degree of risk that comes along with that. And that's what people ignore, the risk. They say, oh, but you could have doubled this. You could have tripled that. You could have 50x'd if you had just put your money in at this time. You could have bought VeChain for less than a penny and it went to $100, blah, 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 blah. You go, oh, yeah, all right, that's what I'm interested in. Yeah. But there's a degree of risk that comes with that. Are you willing to throw your $1,000 out the window? If that's the case, then you're willing to take the highest degree of risk. I don't care if it goes to zero. I'll throw it all in there. Who cares? Now you have a large risk appetite. Okay, cool. But if you're conservative and you're trying to learn and you want to do this right, you need to keep risk minimized. Okay. So understand risk first. So I would tell you, think like an investor, number one. Number two, learn about risk. Evaluate risk. Learn risk. Okay. And also embrace markets are random. So as you're going through all this stuff that you're learning, okay, don't be fooled at any moment. At any moment, don't be fooled into thinking that there's some kind of special skill to this. Okay, anyone can step in and throw money at it and randomly make money. But there's going to be a lot of illusions of this is a game of skill. Don't be fooled by that. This is a random game. This is a game of chance with a very small portion of skill. Okay, and over time, you'll get to understand what that portion is. But if you go into it early, understanding that this is a game of chance and that everything is pretty much random, no one knows where things are going, and you're focused on risk, I think you have a better chance of doing this right and making rational and objective investments at the right time as the market eventually finds its bottom. Keep in mind, you can also invest when the market stabilizes and starts to work its way off the bottom, right? You have to stay objective though. When the market does something like that, everyone is still going to be bearish. You have to understand, oh, this is not a real rally. When Bitcoin went to 3,000 back in 2018 or whatever it was, 2019, everyone was calling for 1,500. Okay, we weren't though. We were actually going long, but people were calling for 1,500, and people were bearish all the way up until 20K. And then people started to get bullish again. So understand that. Okay, don't listen to people, but learn basic technicals. Learn some basic fundamentals, learn how interest rates work, understand markets are random. All right, that's my rant on that. I got to wrap this up. Take some serious, right. Well, that's true, but it doesn't have to. Miami, it doesn't have to. Yeah, pineapple toppings. No, it's still bad for you. It's just size. It's just size. Okay. And if you have a problem with you can't control, that's an emotional problem. I can't help you with that. But it's really size, and looking at your account as in proportions. If you have $100,000 to invest, you're going to want to cut that up into proportions, and some areas of that are going to be riskier than others, right? High risk, speculative assets should be small, but then you have a conservative area of the portfolio of stocks that pay you to hold them and all that kind of stuff, right? All right, anyway, so that's it. Yeah, see, I was going to wrap this up much earlier, and I keep talking because I like to talk. Today's a holiday. What else am I going to do? Actually, I have a lot of work to do. All right, I make some great homemade pizza, and I guess I have to go take. Yeah, okay, Alex. I'm just going to answer these. Let's see. We need a fish oil pizza. Well, if you put the fish oil on top of the pizza, it's still bad for you because you can't eat the pizza. You have to eat the fish oil by itself. See, look, I started a whole health food argument here. David from France, if you still have time, okay, very interesting chart. Now I got to wrap up. No more charts. Look, ask me next week, David from France. Okay, but thank you for mentioning. I'll take a look at it after, but I got to wrap this up. Needs to break a buck. Okay, going all in on pizza. Okay, all right. Just remember, it's a comfort food. In the same level with. Is that concerning? US 2, yes, that is very concerning, Alex. I just mentioned before, the 10-year and the 2-year should not be at the same level, right? That's going toward the inverted yield curve. That's a sign of recession. We shouldn't be seeing that, right? The 10-year yield should be higher than the 2-year yield. They shouldn't be at the same level. All right, so I'm going to leave you with that. Anyway, hey, everyone, thank you so much for spending some time with me here today. I hope you got something out of my stream. I mean, I spend a lot of time. It takes me like the whole day to just get this stream going and all this other stuff. And I hope you all got something out of it. My goal here for you is to come out of this with a higher degree of confidence, a better understanding of how to make objective and rational choices, whether it's invest, you're looking to invest, you look at the swing trade. I don't talk about day trades here. But that's the goal here. I want you to come out here with more perspective, right, for the week. So again, to remind you, we have Chairman Powell speaking on Wednesday and Thursday. Things can change dramatically. Again, it's always about looking at your risk first. If there's a potential risk expansion, a range expansion about to come into your range, you need to account for that. Okay. All right, you guys. So, hey, I want to thank you all again for taking the time. If I missed your question or I couldn't answer your question, I apologize. I do this every Monday. Please come back next Monday and please ask me again. I'll be happy to answer your question. Okay, so wherever you are in the world, thank you so much. Enjoy the rest of your day or the rest of your evening, wherever you are. And thank you very much for watching.